Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Now, Jordan, quick comment regarding gold on the spot market. It's over 1800. We are seeing a breakout here. We're also seeing a breakout in a number of the stocks. The stocks continue to perform well, but now we're finally seeing GDX, GDXJ, those move above some key, at least short-term resistance levels, really trading at levels now that we haven't seen since 2013, testing out some of those old resistance zones. Take us through your general thoughts on how this strength is shaping up for you.
Well, Corey, I would say, looking at the metals, gold's gone through 1800 last Wednesday, I think at the end of the quarter. I forget if it was Wednesday or Thursday, but we did have a quarterly new all-time high. So that was really significant. And there, I was pointing out the stocks were strong, with the metals had not broken resistance yet at 1800 and 1875. Today we got the breakout, and silver has gone through that level. Gold, I think it was the day prior, above 1800. So that's a breakout in the metals. I think the upside next targets would be 1900 for gold, and for silver, probably in the 20 to 21 area. I mean, you do have the 2016 peak, which is at 21, and then in daily closing terms, I think it peaked around 2055. So we'll have to see, but those are the targets I'm looking at. With respect to the stocks, there are long-term measured upside targets, which I think are 50 for GDX and 80 for GDXJ, based on the 7-year breakout. But, based on the action over the last 5 or 6 weeks or so, I mean, you could make a case for GDX that it has a measured upside target of about 44. For GDXJ, you can make the same case and say, this has a measured upside target of 57 or 58. So those are near-term levels to keep an eye on for the miners. Today we gapped up, so that's kind of an emotional move. So we'll have to see if this is the start of even more gaps over the next couple days, which could be filled during a correction, or if today is kind of an emotional gap that gets filled the next day or two, and then we go higher after that. So, I mean, not to get too inside baseball here over the next day or two, but that sums up how I see it. We touched on it last week, Corey. I mean, we're seeing early signs of what happens when you have a bull market in the junior sector, and we were talking about this months ago, and that was my thinking, is when GDXJ would take out the 2016 high and gold would take out 1800 or 1900, that's when you would see momentum pick up in the sector and speculation pick up. And that's exactly what we've seen happen over the last few weeks. We're really starting to see money, capital flow downstream in the sector. It's going into smaller names. And in addition to that, you're just seeing capital move into the sector at large. So that's why everything is getting bid up. There's just oceans of capital coming into the sector. Everything's getting bid up. The sector is getting re-rated. So it's a good time to be holding precious metals. You want to be a little careful because we're a little extended here, but it can continue in the short term.
Yeah, no doubt this is a very good environment to be really in any precious metal stocks, even if it is a lower quality ones. They have been bouncing. Quick comment, though, regarding how the stocks have actually been outperforming the metals. I have a GLD to GDX chart here, and outside of that, weird action in March, the stocks have been outperforming the metal. So that's a very bullish sign moving forward, isn't it?
Absolutely. Yeah. I think, sometimes we pay too much attention to, divergences. I mean, divergences are important, but they can get remedied in real time. And so in real time, when you're really looking at, you just want to look at day by day moves and see, are the miners outperforming the metals? And again, in the last week or two, that's what we've been seeing. We've been seeing, for the most part, strong moves in the miners. I mean, even today, you got GDXJ's up almost 4%, GDX 3.5%, Huey's up 3.5%, SILJ that's up over 5.5%. So that's leverage to the metals. That's exactly what you want to see.
Now, what about the fact, too, that a lot of money has even trickled down into the juniors and even into some of these micro cap stocks? It really is, following up on what we chatted about last week, a lot of speculation has come into the sector. Do you see a sweet spot right now when it comes to the internals of gold stocks, whether it's, say, the mid tiers that maybe haven't quite moved as much, or still some of these juniors that have just doubled in the last week or two, or maybe some of these majors that have just continued to grind higher? Do you see one area of gold stocks as being a bit more attractive in a value sense?
It's a really good question. I would point to silver stocks, honestly, because I know you asked me about gold stocks. I mean, here's my two-part answer. Generally, I would say silver stocks because we know that silver tends to lag. And by silver stocks, I mean more the silver juniors, not the larger silver companies, which are, basically they're really like gold companies masquerading as silver companies. But that's why I focus on SILJ and the silver juniors. But I think that's where the most value is and the most upside potential. And at large, Corey, it's really hard to say because I mean, most everything I'm following is really moving right now. There's nothing that's standing out as like really cheap. I mean, a couple weeks ago, there were here and there were some stocks on my list that were cheap, and I pointed that out to subscribers. But anything with a good amount of quality that was cheap a couple weeks ago, I mean, it jumped 20 or 30% easily during this move. So I think as far as a sweet spot, Corey, it's really hard to say. I just point to the silver juniors because they tend to, they tend to lag a little bit, and those are coming around now that we have silver breaking out. And when you look at silver, you only have resistance now at 21 in between where we are now and $27. So that's what I would point to. And in addition to that, I honestly, Corey, I think it's going to be exploration. I think it's, the companies that make new discoveries, or they make a discovery that adds a lot of value to what they already have. I think those ones are going to be the biggest winners. I mean, we were talking before, one of the larger juniors on my screen, a producer that's been very successful. I won't say the name. I mean, they had really good drill results today. They're up 10%. This is this is a $1 billion company. So good drill results up 10%. That's just one real-time example for you. I think it's still going to be exploration. I think, look, you can make money in everything now almost. It's dangerous to say, but when you get in this type of a move, but continue to focus on exploration because if you're a producer, a developer, you have, great exploration results, you add value organically, that's just massive for the value of your company. And even for producers, I mean, I know I'm going off track here, but the best performing junior producers over the last 3-4 years have been the ones with the most exploration success. So I would still say exploration success is the sweet spot.
All right, Jordan, final comments here. You even mentioned it on your first answer, and that is the potential of this just still being early stage bull market moves. Already stuff has moved so aggressively. Some stocks are up 5 times where they were at the beginning of the year. Are you truly considering this still very early stage in a precious metals bull market?
Unfortunately, I can't give you a one-sentence answer, but I'll try and be quick. The overall bull market, we talked about it last week. I still think there's 3 to 5 years left. Now, moving even shorter term than that, if we look at these big breakouts from the 7-year bases, we have measured upside targets of about 80 in GDXJ and 50 in GDX. So there's still a lot of room there to move. Now, moving into the short term, I gave you shorter term measured upside targets. So I think in the short term, Corey, that this move is really getting extended, and we have to be a little careful about putting new capital to work here and now. I mean, if you find a value, that's great, but you just have to be a little careful because I think if we keep running like this for another couple weeks, then at that point, we could see another correction. But aside from that, Corey, if we're looking at the breakouts from the 7-year bases and then my big picture view, we have 3 to 5 years left. From that respect, we're at the beginning or early stages of the move. But if we're looking at medium term or short term, this move, we are kind of in the later stages of that. So be a little careful.
All right, Jordan. Great chatting with you as always. Hey, it is a very good market right now, as I said on the onset, to be invested in metal stocks. hopefully this does continue. Yes, there will be short-term pullbacks along the way. We actually haven't had a pullback now in months, but when we do get those pullbacks, I believe those will continue to be buying opportunities. Jordan, thanks for your time today, bud. Talk to you next week.